Hello, my name is Joy Macknight, Transaction Banking and Technology Editor at The Banker. I'm here today with Ruth Wandhöfer, Global Head of Regulatory and Market Strategy at Citi, to discuss the major changes in transaction banking driven by regulations in the past year, as well as touch on the implications of moving to instant payments in Europe. Ruth, thanks so much for joining us today. So there's been a lot of regulatory changes across the globe, really, but in terms of Europe, and what do you think have been the major challenges for banks in the new regulatory regime?
I would say across the last year, a big change was the liquidity coverage ratio with Basel, which has really transformed the way you run liquidity and manage liquidity in the bank and what it means in relation to clients, particularly on the wholesale transaction banking side. I would say another area of very significant importance was recovery and resolution planning, which was even more heavily impacting the US market, but because transaction banking is a critical service, that was a key point. And certainly tax laws such as the US FATCA regime are implicating all transaction banks and all correspondent and payment banks around the world, and that has been a significant compliance exercise as well.
Okay, and also the Payment Services Directive 2, which came in October, but obviously has like 3 years actually to come into play. Although it's focused a lot on the consumer side, what impact will it have on transaction banking?
Yeah, so the PSD will be officially with us in December. The PSD, as you rightly say, is more consumer focused, but it does introduce now new types of services and providers, which can offer services both to consumers and to corporates and SMEs. So there is a wholesale implication. These services have to do with a kind of basing services on bank data. So it's all about access to bank data, account information services, payment initiation services. And I think we will see a lot of interesting technology change using API interfaces where the data travels between banks and third parties for the purpose of new services. How far and how fast this implicates the corporate market will be seen. But I think it also gives a very interesting incentive and interest for banks on the transaction banking side to also come up with services, because if you can access bank data from other banks, you can do the same thing. So it's not restricted just to new non-bank players, but banks can equally enter that service area.
Excellent. And my last question is around the move to faster payments. Obviously, there's a big initiative within Europe. Sort of what are the challenges do you think that banks will be facing in that move to, instant payments?
So right now in November, we've actually submitted the first draft of the business rules for the instant SEPA payment scheme, which was requested by the European Retail Payments Board. I think a key question and challenge is around settlement and credit risk, which is currently not addressed in the business rules because the business rules are much more about messaging and step-by-step transaction execution. We will have to collaborate closely with the Eurosystem and Target 2 in terms of understanding the settlement cycles and whether they may extend opening over weekends. I think we will have to look at implementing credit caps for the different banks, because we're now looking at a cross-border space. And of course, if you do a faster payment domestically, you know your banks pretty well and you can contractually set up a lot of things. If you have a pan-European reachability across all banks, you are looking at a slightly different risk profile.
Okay, excellent. Thank you so much for coming in today, Ruth.
Pleasure.